Making gifts can actually have a big impact on your estate, because what ultimately happens at death is you'll pay inheritance tax on your estate that's over the nil rate band. But what gifting does is you can actually get cash assets out of your estate quite legitimately and reduce that estate value for when you're looking at your death estate. So potentially reduce the amount of inheritance tax that you pay on death. Parents have a higher limit than giving to their children, compared to giving to long distance relatives like cousins and so on. And there is a range, so I'd always say check what the range is to be absolutely sure. So you can have a smaller £250 limit for a birthday compared to a £5,000 limit for a wedding for a child. So there are different limits for different gifts. So it's always best to look into that to make sure you can give as much as you can for it to be out of your estate. The 7-year rule that we talk about typically applies when you're gifting cash or assets to an individual throughout your lifetime. So what happens is you make the gift to a person, the 7-year clock starts. So really what happens is you survive 7 years and the value of the gift that you made is outside of your estate for inheritance tax. There is a tapering, so ordinarily you'd look at year 3 to year 7 and there's a 20% reduction throughout that time. So the key is to survive 7 years after a gift to be completely free of inheritance tax on that gift.